This week could define the rest of the year for Bitcoin, crypto, and global markets. The government shutdown is about to hit day 30. The Federal Reserve will announce its interest rate decision on Wednesday, and Jerome Powell will deliver one of the most anticipated statements of his entire career, all while operating under a data blackout. And at the same time, the 5 biggest tech giants, speaking of Microsoft, Google, Meta, Apple, and Amazon, will all be reporting their earnings. So together, that's more than $15.2 trillion in market cap, releasing their results at the same time into the market. And just a couple days before Trump's 100% China tariff goes into effect, he's meeting directly with President Xi Jinping to strike a deal that could redirect global capital flows overnight. So we see every corner of the system is about to move. Politics, monetary policy, and markets. And Bitcoin is right in the middle of it all. So stay with me, because by the end of this video, we're going to unpack the hottest narrative in crypto right now, what's driving it, why it matters, and everything you need to understand before the rest of the market connects the dots, at which point you know it's too late. So let's dive in. Let's get started. And as we do, the stage could not be more dramatically set up. A government shutdown, a Fed decision, and a possible US-China trade breakthrough, which would be very much so well welcomed, are all happening within days. And this week's mix of political tensions and policy uncertainty could move trillions of dollars. And as I mentioned in our last video, the US has $7.4 trillion parked in money market funds. That's cash waiting for a signal on where to go next. So if the Fed signals easing or Trump strikes a deal that avoids tariffs, that cash doesn't sit still. It floods back into markets. Stocks, bonds, and crypto could all experience one of the most aggressive liquidity rotations we've ever seen. And so we know every macro trader, hedge fund, and algorithmic desk on Wall Street is watching the same thing. And that is Powell's tone of voice, the tariff timeline, and how the yield curve reacts. This week will reveal how the next phase of the cycle unfolds. That's why I'm so happy if you're here joining me today, because this information should inform your week, how you manage your emotions, and potentially what kinds of decisions you make. I will say, I think it's not a good week to put any leveraged bets in, simply because of the volatility we can expect. That said, let's keep moving on, because while everyone's been calling for a correction, the markets just keep breaking records. We see the S&P 500 added $3 trillion in value in just 16 days, which is the fastest climb in history. And despite the worst macro pressure we've seen in months, from government gridlock to bond market chaos, Bitcoin is still trading above $110,000. That strength has traders flipping bullish again. And if you are a fundamental investor, as am I, then the price news honestly does not move us very much. It's like reading a weather report. We know Bitcoin is going to $1 million someday, and that's more than enough for us. But market sentiment matters, and that's why this is important. So now, expectations are building for a rate cut next week, another one in December, and more heading into 2026 as the Fed ends its quantitative tightening cycle. So even as banks are turning euphoric, Standard Chartered just said the Fed is about to cut so much that Bitcoin may never go below $100,000 again. So the message is clear. The 5-year cycle is underway, although we don't know the exact duration, but we know we've broken away from the 4-year cycle. And we see the strongest assets are already leading, and institutional conviction is louder than ever. We see Strategy just added another 390 Bitcoin at an average price of $111,053, spending over $43.4 million in the process. And right behind them, the Trump-backed American Bitcoin entity added 1,414 Bitcoin in the same week, which is another clear sign that capital aligned with political political influence is moving in. And now, Norway's largest pension fund has taken a $29 million position in Bitcoin exposure through strategy, bringing a traditional retirement capital into the same playbook. And across the broader market, that institutional shift is spreading very fast. We see Solana is becoming the next major magnet for professional money. According to CoinShares, Solana-based funds have now logged 20 consecutive weeks of inflows, totaling $2.8 billion year to date. Meanwhile, ETF data confirms the broader pattern. Bitcoin ETFs pulled in $4.7 billion over the last month, while Ethereum ETFs added another $983 million in new inflows. So all of this points in one direction. Institutional liquidity is no longer on the sidelines. It's accelerating into the market. It's as they say, the future is already here, it's just not widely circulated. However, in the case of Bitcoin and strategic blue chips, it is. What we're seeing now is the early phase of a structural shift, where traditional capital, from pensions to corporates, start treating Bitcoin and crypto as part of the core allocation, not the speculation bucket. And Bitcoin's technicals are firm, and momentum is building again. We see the latest chart from Rect Capital showing Bitcoin holding the $114,000 demand zone and forming a new higher low, which is a classical signal of structural strength and continued accumulation. The pattern fits the same setup we've seen before. Every major rally since 2024 has started the same way, with open interest collapsing, traders getting wiped out, and price accelerating upward as the market resets. And liquidity conditions are backing that story. The stablecoin supply ratio from Glassnode shows the stablecoin liquidity sitting near cycle highs, meaning there's more dry powder ready to deploy now than at any other point this year. And structurally, the supply side keeps tightening. Mt. Gox repayments have been officially pushed back to October of next year, 2026, removing another potential wave of sell pressure that could hit the market this year. So all of this is starting to show up in price action. Bitcoin just recorded its best weekend performance in 16 weeks, a clear sign that demand is returning and the bid side is waking up. These signals confirm that the foundation for the next phase of this market is already forming. We see strong technical structure, deep liquidity, and tightening supply. But the story does not stop at Bitcoin's chart. The same forces driving liquidity into crypto are now colliding with a much larger technological shift, that is the rise of AI. And that collision is creating something new, a digital economy that runs on crypto rails, where AI and blockchain begin to merge into one system. If you've been following the markets and the news, you would know that AI spending has become the biggest capital expansion of the decade. And new data shows global AI investment is set to rise from $1.48 trillion this year to $2.02 trillion next year, 2026, which is up nearly 50% year over year, which means next year AI investments should be up 50% year over year, and over 89% of major corporations plan to increase their AI budgets over the next year. So that flood of capital is creating a massive demand for faster infrastructure, instant payments, and real-time access to data. Blockchain technology in many ways is the yin to the yang to AI. So this isn't just about technology anymore. It's about how money moves through the internet itself. Now let's talk about one of the most exciting upgrades emerging. It's a new protocol called X402. It's quietly changing how payments work online and could form the backbone of what people are starting to call the Agentic internet. Right now, everything online depends on accounts and subscriptions, systems designed for humans, not AI agents. However, we live in a moment in time where these agents that are entering into the marketplace are beginning to browse, research, and transact autonomously. But there's a problem. They can't register for services or use credit cards. X402 solves that. It's a crypto-native payment layer that lets websites get paid instantly in stablecoins. No accounts required. It's pay per use. No monthly billing, no intermediaries, and no human setup. An AI agent can now discover an API, pay for access, retrieve the data, and keep working completely autonomously. And at the same time, developers can monetize their data and services in real time. Built by Coinbase, X402 embeds stablecoin payments directly into standard web requests, operating across EVM chains and Solana. And we see adoption is already spreading through Cloudflare, Versal, AWS, Google, Anthropic. They're all integrating crypto payments into the web core infrastructure. It is very early, but this could become the financial language of the next generation internet. Fascinating. And as AI agents scale globally, X402 may very well evolve into the standard that connects them all, the bridge between artificial intelligence and on-chain finance. So as we wrap up today's video, remember, we're entering the ignition phase, the takeoff phase of a new financial era altogether. This week, the Fed's pivot, the China trade war thawing out, hopefully, and the record institutional inflows are all converging with the AI crypto boom to create a synchronized global shift. Bitcoin's structure is strong, supply is tight, and every data point from ETFs to on-chain liquidity show confidence is building fast. We see even legacy funds, pension managers, and tech giants are all rebalancing toward digital assets as the new standard. Every single signal has flipped green. This is what a 5-year cycle looks like, though I'm not saying it may be exactly 5 years, though it is extended. And it looks like this: liquidity expansion, capital rotation, institutional acceleration, all happening at the same time. I hope you enjoyed today's video. And just remember, we've been working very hard to keep you ahead of everything. So please like and subscribe if you want to stay ahead in knowing what comes next, because that is what we work very hard here at my channel to do and bring you every single day, Monday through Friday. This next phase of the market is the one we've all been waiting for, and it's already begun. It's already moving faster than anyone expected. So I hope you join me tomorrow. I love you guys so much. Take care.